The big whale, Berkshire Hathaway, making some noteworthy moves during the quarter. Warren Buffett's firm selling 99% of the remainder of its Wells Fargo stake. One Berkshire had been paring back for years, but in the first quarter, it went from $1.5 billion to just $26 million. And here's an unusual one for Berkshire. A pretty quick change in sentiment about a holding, cutting in half its stake in Chevron, shares the firm acquired confidentially just in the third quarter and revealed only last quarter. But at the end of March, Berkshire still owned about $2.5 billion, despite selling 25 million shares. Now, Berkshire also trimmed Merck by 38% to hold $1.4 billion worth at quarter end. While Berkshire had indicated that it was going to be a net seller of equities during the quarter, the firm did make some additions as well to its portfolio. Berkshire took a new stake in professional services provider Aon worth $942 million, and it boosted a stake in Kroger by 52% to nearly $2 billion. Note, all of these positions are from March 31st. They may have changed in the 6 weeks since, but at least it's a peek into how some of the big managers, particularly Berkshire Hathaway, traded during the quarter, guys.
Talking about Berkshire Hathaway, Leslie, but we can expand this out. I mean, for weeks now, we've been talking about the rotation out of tech. We certainly see that more broadly in the 13F filings that we've gotten and you've been digging through over the last couple of days. It looks like we've had some hedge funds piling into some SPAC names, into some more value and cyclical focused stocks as well. It kind of speaks to, I guess, more broadly what we've been seeing in terms of market action.
Yeah, absolutely. Now we get a better sense of exactly how people were positioning during the quarter. And you're right, we did see a lot of big names sell out of big tech. They bought into some more mid-cap tech names as well. A lot of selling in Tesla. Oftentimes these things do mirror what happened in the broader market because these are the people who are, making moves and trading and having an impact. But, it was interesting on Fast Money. One of the traders said yesterday that a lot of the selling perhaps in big tech could be coming from people who are looking to crystallize some of the lower capital gains in anticipation of higher rates in the future. That was an interesting theory, I thought, but it certainly reflects what we're seeing as well, especially in some of these more liquid names like the big tech names.
Shepard Smith here. Thanks for watching CNBC on YouTube.